Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on stock charts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed for more information throughout the week. Okay, so today what I thought I would do, is focus in on the first quarter, and one of the things that happened this quarter, obviously, was we had a big, beautiful rally. So that was really good to see. And I want to talk a little bit about where we're going here, because there are enough red flags here to just scare me. And so anyway, I'm going to cover off a little bit of that. I'm not going to spend a lot of time on it, but why gold is precarious with Thursday's drop. And let's jump into the charts. We're going to start with, this is the S&P performance for 1 week. And one of the things we're noticing is technology is no longer performing with the leaders, and it's staples, real estate, and utilities that led over the last week. So that's got me concerned. And again, we did have the inverted yield curve last week. And so on the, I'll call it first week anniversary of that event, all of a sudden the market is lining up more defensively, with technology clearly underperforming. Anyway, so that's an issue that we're going to watch to see how it resolves next week. But usually when technology underperforms for a couple of weeks in a row, that was a really good clue at the September top that we had problems ahead. So anyway, we're going to just be aware of that. Here is the charts for, I just made a mistake there. There we go. Okay, and I just want to zoom in here a little bit. Okay, one of the charts I like to follow is the railroads. And the reason I like to follow them is they seem to do a better job of keeping track of when the market's actually weak enough to break down. And you can see we're trying to break through a prior high. This is a 10-minute chart. And down here on the daily view, you can see why it's really important that we're focused on the railroads here. They're trying to break through this prior high from September, October. They've pushed up a little bit here. We're having a nice big push today, trying to get through that prior high, and the PPO looks like it wants to turn up. Obviously, it would be really important that it finishes that turn. Now, if we look at the S&P 500, you can see really we haven't made any progress since the 25th of February. We've been right at this 2,800, and today's the first day we haven't tested that level in a couple of days. So we'll just see where we end up. And I realize market started off very bullish, and so we'll keep watching. And again, we have the anniversary or the opening of the lift stock, so we'll see how that performs today. But here's the railroads on a weekly, and one of the things we're watching for here is if this is going to roll over now. This is a precarious place. Same thing for the S&P 500. We have this downtrend in momentum, and so I'm watching to see if it rolls over now. But so far what it looks like is last week was try to push to a new high, and then this week we're just still holding in that same range. So very critical levels on all of the charts. So I want to jump through and do a world tour on the weekly chart. So this is Brazil, and again, a big commodity country that's been performing very, very well. It hardly pulled back in the October to December timeframe. And now what we see is the first test of the 10-week or 20-week moving average. And you can tell as we're starting to roll down here, this is closing near 6-week lows. Last week was down at this level as well. So we just want to keep watching to see if the commodities are going to start to perk up, but clearly they're starting to underperform. Moving on to Russia. This Russia chart interests me for a couple of reasons. One is that it's been trying to get through this 1200 level, and then it did for 1 week and pulled back, and then it consolidated again, it took off, and then couldn't hold these highs and pulled back. Consolidated again, couldn't hold these highs. So we're stuck here at this 1200 level. And again, if Russia's going to start to break out, that would tell me that commodities, things like oil, are probably going to start to do well. And when everything starts to break down relative to the S&P, that's a concern. So here we have this uptrend relative strength uptrend that we could draw in here, and we wouldn't probably want to see it go below the 0% line. So anyway, Russia's right on the edge. Australia is clearly making lower lows and lower highs this week, and it had a pretty good overnight session, but you can just see that the momentum is starting to wane a little bit. So I'm watching mostly because of this triple top setup here, and Australia still looks okay, with the exception of a new 1 month low or 5 week low to this week. At least it's still up near the top of the range. The Toronto Stock Exchange has closed, within a whisker of this 1600 level, or it's danced around the 1600, 16.2 level for 6 weeks now, with no real progress. And today it is trying to hold up again, but the momentum is definitely waning on the weekly, and we're starting to make new relative strength lows here, going back 2 or 3 months now. One of the things I will say is the Canadian market topped out in July and started to pull back in 2017. The Canadian market started to get weak and went on a 6-month run here where it just kind of consolidated sideways for 6 months and then had a real pop. But in 2018, you'll see it actually broke down kind of in the 3rd or 4th week of September, a week before the US markets broke down. And in July, it started to really break down. September, again, was the US market high, and the Canadian market had rolled over. So keep an eye on the Canadian market. If it can hold its lows, that's still helpful, but it's one of the areas that I think is very vulnerable. Our GDP numbers keep coming in quite low. The Shanghai market's going to close right up near the top of the range again. So we've had 5 weeks of back and forth, and no real change there. Hang Seng, same thing, just kind of 5 or 6 weeks back and forth. Relative strength wise, it's starting to flatten out here. So we'll just see. And again, you'll notice back in 2018 when it started to break its relative strength line, that was a good place to be aware of the trend change. Kospi, this one's clearly rolled over, stalled at the 40-week moving average, now going back below the 20-week, which would be the center of the Bollinger Bands. My PPO is rolling over below 0, and it's starting to make new relative strength lows. That just can't be good for South Korea. The Nikkei, this is one I'm watching extremely close. I think this is the canary in the coal mine, as I've mentioned. But if we were to annotate a couple of things on this chart, and again, the Japanese central bank was trying to get involved here this week to keep this holding. And I think they're going to defend this 21,000 level meaningfully because it is such an important place on the chart. And so they're going to close at 21.2, so a little bit still within the range of the week, but nothing to go one way or the other. It did make a new 5-week low. And again, usually when you're making lower highs and lower lows, you're in a downtrend. 1 week doesn't make a downtrend, but I would say it's starting to get precariously low. And here is the reason I'm more concerned is the PPO looks like it wants to roll over here under 0. And again, that just starts to add to the pressure. So not that strong on the Nikkei. And again, this relative strength low breaking out to new, this week breaking out to new 2-year lows, that just doesn't bode well. I think that market starts to sell off. Indonesia, what we see here is consolidating and basically been pulling back for a couple of weeks. And this one just, it's one of the other Asian countries that's kind of an emerging market, more easier to watch that way. But you can just see it's already got a negative cross on its PPO and the histogram starting to increase to the downside. It had a good week this week, which is at least bullish. I'll call it holding in the range here, but we want to make sure this doesn't start to break down. So as it's not that influential, it does have a lot of people, so it's good to pay attention to. This is a market I continue to want to watch, India, and it's trying to break through prior highs, so this is an important place for us to view. Normally when it's trying to do that, you want to see its relative strength at new highs as well. We're not quite there, so anyway, India was going up while everything else in the world was going down, and that's why you have this big spike here. So this is an important level. But even if we go back for a couple of years, if this is going to roll over here, that wouldn't be a surprise. That's kind of where it's topped out against the US for a number of years now. Germany, obviously lots going on there, but this chart looks pretty weak to me with the rollover, new 4-week lows. Tried to break through the 40-week moving average, failed. There's still support at the center of the Bollingers, the 20-week moving average down here, but you can see relative strength starting to break down again. And another caution sign is the rollover near zero. Now, this is happening slower than I might otherwise think, and there are so many reasons to keep checking my work as the market tries to rally here off the lows set earlier in the week. So France is going to make a lower high and a lower low after pushing to new highs last week, and then new 4-week lows were made this week. So again, the PPO's on the way down here, so we just want to be careful with the price action or with the momentum line way down here. Always critical to watch it near zero. Looking at England, and again, all of the Brexit drama, this chart just doesn't seem unfazed by Brexit. It's pretty much doing what the rest of the world is doing. So push above 4-week highs last week, and then this week it made a lower low and a lower high. Looks like it's going to close pretty much unchanged for the last 3 weeks. And again, the histogram's been sideways for 4 or 5 weeks. A rollover below zero is obviously concerning. Do we have enough strength to push higher? I just don't know. Italy. So this one, obviously a lot of financial strain in Italy, but this one's been going to close flat on the week, but it looks like 2 weeks where we tested higher and didn't make any progress. So here is Spain, and what we see on Spain is again a 4 or 5, 6 week consolidation. Momentum is just below zero. Don't want to see it roll over there. We did see that back in 2018 and continues to fall. And you can see my notes on this chart here. Difficult to call. Trying to make a higher low on the PPO. Break of the green line would be bullish. I've changed that to red because it's since rolled over, but the other Eurozone markets were making lower lows. So it was just a sign that it took some time. Anyway, it couldn't break through and ended up rolling back over. And here we are right at zero again. It looks like it wants to roll over one more time. So I feel like the markets this week aren't really making a lot of headway. US market, again, still feels okay because this is going to be a higher close, but it did make a lower low and a lower high this week. So is momentum waning? The histograms are just sideways for 5 weeks. Looking at the Nasdaq, again, can't get through this September-October high yet, but a lower high and a lower low this week. But at least it looks like it's going to close slightly higher. We'll see how the Friday close finishes. West Texas crude, this is up against its 40-week moving average after a bounce off the lows. And we were down to 45, up to 75, 60 would be the mid-range. Well, guess where we are, right at the mid-range. So important to watch here, but a big downtrend in momentum. And again, this trend line is problematic. So the point I want to make here is, let's just grab this orange line and run it out. We're getting right to the place where if it was going to fail, it should happen in the next couple of weeks. The oil stocks haven't really followed oil higher, so that's been a concern for me. Now, if all of a sudden all of these charts start to break out together, that would change my tune and I would be wrong. So far, I'm more concerned. This is gold, and I'm going to just come back to this chart because I want to cover off the US dollar and the Canadian dollar. Here's the US dollar. And what we see on the US dollar, again, is just a sideways chop this week, trying to push up to a higher close. So last week, let's just zoom in here. Last week, we made a big lower low and then closed up in the middle of the bar, or at the top of this bar in the middle of last week's bar. And then this week, we're pushing higher. So we opened, tested lower, closing higher. So now we're in higher highs and higher lows than last week, but not overall. You can see this sideways chop is almost a year long. One of these days we'll get a breakout either way. And then the next chart to look at is the Canadian dollar, and this is kind of a commodity-centric dollar. But we've got a PPO cross to the downside this week. And with that, that's pretty concerning. Again, that doesn't bode well for crude or for commodities in general. So really important distinction here. And before I get back into the gold chart, I just want to stop. Next week's Stock Charts is celebrating its 20th anniversary, and we'll have some guests on the show. Anyway, we've got a quick clip to show you on that.
Join us April 1st to April 5th to celebrate our 20th anniversary here at StockCharts.com with special guests Arthur Hill, Greg Morris, Gaddis Rose, Martin Pring, and John Murphy. Tune in to Market Watchers Live at 12 p.m. Eastern Standard Time during the week of April 1st to April 5th to help us celebrate.
Okay, we're back at it. And for the second half here, I want to cover off gold. And why is gold precarious? I think one of the single biggest advantages of technical analysis is to know when you're wrong quickly. And we don't really get that clue from something like price earnings ratios or that kind of thing. One of the things we get feedback from price is when price doesn't do what we expect. So we have the expected, and if it fails to kind of go where we want, we're probably wrong. For some reason, the trade isn't working. And this week, what we see on gold is after a rally up, a pullback, a big pullback in this week, we had a smaller rally up, but now we made an outside bar. And again, on Tuesday, I put together I don't ignore this chart article to be very bullish on gold. This reversal this week is critical. So within days, we know that we're wrong. And I would be very, very cautious. Now, one of the reasons that I'm more cautious than I might otherwise be, let me just start drawing some lines here. It just wouldn't be Greg's chart without a few lines on it. Let's go grab the tool. But what we can see is that it's not uncommon for the gold momentum to reach this high. But now this week, it looks like we're actually going to roll over and get a confirmed cross on the PPO. This chart will update at the end of the day. So this is a little concerning, but we can also run this chart if we just extend the date back here a little bit, go back to whatever, 7 years is probably enough. What you can see is all the way through this downtrend here, momentum just keeps getting stuffed below these levels. And the last few years has been a little higher than the prior years in the big downtrend. But again, this gold pausing at 1350 and now making a lower high and an outside bar this week is gruesome, actually. There's not a lot of good in it. And I want to show a couple of other things. So earlier in the week, again, on the article I made for Don't Ignore This Chart, we had a lot of signs that were just starting to break out. Well, when all of those fail, that obviously at least helps us reflect very quickly on the chart. So here's the global gold index. And this looks very bullish and was very bullish, everything running up. And the problem we have is the full stochastic looks like after two tries to stay up here, it looks like it wants to roll over. This is a very weak sign. On a full stochastic, it's one of the first indicators to kind of tell you something's wrong. But the fact that we've rallied it up twice and then this little rally here has failed to hold is a problem. Now, if I look at my global gold index down here, we broke out to new 52-week highs earlier in the week, which made me bullish. And now we've immediately reversed. So this is tracking the gold miners. And this support level here is critical. Again, if you break out to new 52-week highs and fail, that's a better signal and a bigger signal that something else is going on than just, okay, well, it just can't hold the breakout. It's okay. I'll keep holding till it gets down here. One of the other clues I've got is that KL, which is Kirkland Lake and West Dome gold mines, have been two of the big movers here off the lows. And look at this negative divergence in strength here. You start to see it roll over. And this stock is actually very close to making new annual lows. And look at the full stochastic breaking down below 50. Excuse me. And you can just see in a big bull market, when you're in an uptrend and you start to dip below 50, that can be cautionary. But more importantly for us, I think, is that this is while the gold was just about to break out. Now all of a sudden for it to fail. So this was a stock that moved from $2 to $5.50 and has now rolled over and has given back the top half of the deal. So we're back from $5.50 to $4. I don't like it when this starts to break, and you can see this relative strength uptrend that was almost a year long has now broken. And look at the scooter ranking folding over here. So there's not a whole bunch of reason that I would want to stay in this until this chart starts to improve. I want to show you Kirkland Lake Gold. And again, on Kirkland Lake, one of the things that we have here is the PPO, after getting up to a nice and high level here, is starting to roll over. And again, if we were to just annotate with a relative strength line, this is starting to crack. I don't like it when something that was outperforming stops outperforming. And the reason I think it's a bigger deal was the new 52-week high on gold, on the gold index, and then all of a sudden it breaks. And look at my PPO rolling over and giving me a negative histogram for the first time after a great rally. So that's very cautionary for me. And again, the idea being we want to buy near the lows on the PPO and then sell near the highs. And quite frankly, that's not what's happening right now. So really worried about the gold setup. And we're going to go and just look at the charts I used in the article. And one thing I wanted to point out is that you can put those charts, you can put those charts in, you can click on them and you can save them in your own files to watch. But it really does concern me that all of a sudden this gold chart was starting to break down. And last week I mentioned one of the concerns I had was that the industrial metals looked weak and somehow gold was going to continue. Well, maybe I should have just been truer to form and said it would be very rare for both precious metals to try and ride its own wave, so be cautious. But here we have the GLD is back below the 50-day moving average after just barely getting above it. And you can see that the GDX is still trying to hold this uptrend, and GDX GLD, again, it broke out to a new 6-month high and then failed right away here. So all of these things failing right after the breakout are very concerning. Let's just go grab the article I wrote. And again, anytime you want, you can just go in here and look at articles by blog type. And so here's Gold Miners Are Shining, written March 26th. And nothing wrong with the chart. It looks like we're going to break out. And that was very bullish. Relative strength was starting to improve on the gold miners versus the S&P staying above zero. This is very good. Now, you can click on this chart again and then click to see the live version. And the problem now is we've rolled right over. And again, we have a nice tight channel here. So if this channel is going to start to break with a false breakout, I think that's a critical spot on the chart. And again, we have a little bit of negative divergence here where we have a lower high on the PPO compared to February, and price got up to the same level. So it's this kind of concern I would have, and then we can draw a relative strength trend line under here. And it looks to me like if this is going to fail, it's going to be right here and right now. Okay, let's just go back and into the article. So one of the other things that had happened was gold miners had been starting to outperform gold, and this is a 2-year trend line, so very strong. Want to see that hold up. And what does it do? The first thing it does is J-hook right back and roll over. So now we've got negative divergence on the chart showing up again. Really tight 3-month trend line that we could draw under here. But this looks to me like a failed breakout and very cautionary. So again, we got the US dollar issue where US dollar looks like it wants to start to go higher again. So it's making higher highs and higher lows this week if it hasn't jerked us around enough. And here's the TIPS inflation protected bond security. So we can click on this chart and just see how it behaved. And what you'll notice is this one still looks fine. Hasn't started to roll over at all. So that clue still seems to be intact. And this was a really nice push back here. And when this went on, this was a break in the gold miners for 150%. But what you see is gold kept going up here and we're rolling over again. So somewhat concerned that this gap has started to appear. Now, one thing I get asked about is how can I save your annotations on the chart? And if you click on this chart, one of the things you can do, it'll open for you in your in your own chart list. And then what you can do is you can click on the annotate button. And if you do that, all of the annotations that are on the page will stay. And you can write, whatever. Greg thought gold was breaking out. And then you can write that on the chart. And then when you go to save it, it'll say, where do you want to save it? And when you do that, it will save the chart with the annotations. So we can just save it in my favorite chart list. Again, and I recommend everybody have one of these chart lists to dump things into. This is just a chart list. Every time I look at a chart and I want to save it or write an article, I want to save it, or see something on a chart that's interesting, I'll put it all together. And by doing that, having this chart list, you can see that it is a catch-all bucket for lots of different reasons. But the big thing that I think it helps you do is stay organized. And again, the way I like to organize my information in my chart list is put the initial for the ticker symbol, then put the year, the day, and the month, and that will help that'll create the sort order that everything flows down. So you can just line things up. So as an example, I look at US dollar a lot, and you can just see all of these different changes in the US dollar as I go forward. I just keep writing it up. And here's crude. Talked about it the first week of January, and keep working through. So anyway, I think that those two tips can be helpful. Let's go back and just check and see if Lyft has started to trade. No, not yet. And then the other thing I wanted to look for, when I mentioned the railroads at the beginning, I don't know if I showed this very well, but I just learned of this feature on stock charts a few weeks ago. And so I've been madly using it ever since. But if you just wanted to compare two indexes, whatever, and let's compare $RUT. So I expect these two indexes to get weaker before the US market gets weaker. And now we can just go through and look and see what's going on. So this is clearly having a bad day today. The TSX is unloading, and here's the Russell. Hasn't started to unload yet, but I think just be aware of how weak the Canadian market is, because I find it usually leads the US market down. TSX, again, trading in this tight range. If it ends up at 16,000 on this chart, I wouldn't be surprised. That takes us right back to February 20th. Here's the Russell, and again, it's making lower highs and lower lows. PPO is right at 0. If there was any place it was going to start a rally, it would be right here. I'd expect it. And if it fails to do that, I'd be very, very cautious. I don't want to see the Russell get into a negative situation, even on the daily chart. Again, this happened as it broke through the 50-day moving average. We're sitting on the 50 here, so just be extremely cautious. On the big picture, you can see that Canada continues to try to get through this 16,000 level. It's been a burden for almost 2 years. And here's the Russell. This 1600 level goes back into January. And again, this makes a left shoulder ahead and a right shoulder if that was going to happen. PPO below 0, so it would be rolling down. Thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern and 7:30 Pacific on Stock Charts TV. Here's how to add a moving average for the volume on your charts. You can't use this volume component here, so go down under Indicators, select Volume from the drop-down menu, and then put the period that you'd like on it, and you can specify the color of the moving average line. Click Update, and that will give you this nice little line on here so you can see if it's above or below average volume.